All right, today we're going to start on the new project that I just completed, which is taking you from a complete beginner's trading strategy and turn it into a professional trading method with a profit probability of 68% or more. Hi, this is Lord Loyens with Black Bear Dog Trading, and I'm really excited to get going, and I hope you are too. You are about to embark on an amazing adventure that in the end is going to be really spectacular for you. So, by the way, before we get started, two side notes. Number one, trading carries risks, and you could lose all the money that you invested or put in your trading account. That's number one. Number two, this is not, when I say a beginner's course, and take it then into advanced and from there into professional. I am not talking about total beginner. You have never traded before, you know absolutely nothing. Unfortunately, this is not for you. When I say beginners, I mean that you at least already have a trading account somewhere. You've been dabbling in trading a little bit. You at least know how to load an indicator on your chart or open up a new chart. Things like that. You have some understanding. All right, getting that out of the way, I'm using the MT4 platform, but what I'm about to teach you now over the next several videos works on any platform, regardless of which platform or which broker you use. The tools we're going to use for our trading strategy come defaulted with your platform, so there is nothing to buy, nothing else to do. All right, let's get started. Enough jibber jabber, let's do this. So we start with opening up our chart, and we use the Euro USD at the 1 hour chart. And the reason we use the Euro USD is that it's the most liquid and most traded currency pair on the planet. It has the great opportunities for having several trends up or down, which is exactly what we're doing, because the strategy you're going to learn, take from beginning to pro, is called the MA Breakout with RSI filter strategy. I'll repeat, it's an MA Breakout with an RSI filter strategy. So first of all, let's talk about what is a breakout. Well, a breakout is when price moves above the trend, and then you look for a buy position. When price moves below the trend, you look for a sell position. That's the very short of it. It gets a little bit more involved than that though, because just having being able to tell you where the trend is going and then wait for a bar to move above it and then enter a buy position on the next bar opening up above the trend line is not only not always very accurate, it's also quite often false, because the price can still retrace and go back down the the trend line. And now if you entered a buy position, you would be in a losing trade. And of course, the reverse is equally true. Price dips below the trend line, and the next bar also starts below the trend line. Hey, I got a breakout. You enter a sell position, but then price retraces and goes above the trend line, and you basically had a false signal. And again, you end up in a losing trade. So we're going to use a few tools to minimize false signals so that profitability is higher, and probability has to be definitely higher so that we automatically have greater profitability. Goodness. Let me repeat this. Probability of the trades has to be higher so that we automatically have greater profitability of the trade we take. All right, understood? So what do? Well, we use two indicators. We use a 50 moving average and we use the RSI. So why? Why are we using the 50 moving average and why the RSI? Well, the 50 moving average is by most professional traders considered to be a very valid determinant of whether we are in an upswing or a downswing, meaning an uptrend or a downtrend. It is generally accepted that the 50 moving average is a very good support level for both uptrend and downtrend. It's suggested that when price moves above the 50 moving average, we are in an uptrend, and when price moves below the 50 moving average, we are in a downtrend. Hence why we use the moving average. Now, specifically, we are using the 50 moving average EMA or exponential, not the simple. While we could, we're sticking with the EMA. Why? Again, the EMA or exponential moving average, the text changes in price faster than the SMA or simple moving average does. The simple moving average is a little slower, and so it responds a little slower to price changes. The EMA is a little quicker, so by doing that, you may get better entry opportunities. Next, we use the RSI. The RSI, or relative strength indicator, which is an oscillator, we use, it comes defaulted set at 14 periods, but because we are trading an actual breakout routine, we use it to the 20 period. And the reason we do that is it will slow down the volatility a little bit that comes with the EMA, thus giving us a better signal. The 14 period is a little too fast, and combined with the EMA, we still may get more false signals than we would like to have. Again, the purpose is to go from a very with high probability, which leads to high profit. Oh my goodness. We're aiming for high probability that leads to high profitability. Goodness gracious. Anyway, you get what I'm telling you now. So that's it. That's why we use a moving average 50 period, the exponential, and why we use the RSI, or relatively strength indicator, and have it at a period of 20. So at this point in time, let's just do this and install this. Whatever trading platform you use, go to your indicators installation option and choose moving average. We set 50, exponential, on close, use whatever color you want, click on OK, and you're done. Repeat that step, go again on installation of wherever that option is for your platform. Now we go to custom in the MT4 platform. I don't know what it is in other platforms, but you should know. Click on RSI, and the default is 14. We will set this to 20. Click on OK again twice, and here we are. We are now we have now the basic setup. And while this works, it is not very reliable, for the simple fact, as I stated, price here is below the EMA, so we are in a downtrend at this point in time. Price continued with the next candle below the EMA, definitely very good, but we got a problem. The RSI is telling us that while we're sitting at 48, we're not really low enough for this to continue. And sure enough, we end up getting a crossbar, and then from there we go into a bull bar and another bull bar that touches the EMA again. So this would definitely have been a false signal, and you basically would have not made any money. So to minimize that, we're also going to install a baseline on the RSI. And to do that, we simply, in MT4, we go to edit the properties of the RSI. We go to levels, and where we have the default 30 and 70, and please do not change those levels. They are crucial. Click on add. We now enter 50. That's all we do. You can change the color if you like. Let's make it a tiny bit darker. It's easier to see, at least for me, since I'm colorblind. Click on OK, and now we've added the 50. So now we are ready to basically already begin trading. So we see that the bar, however, is a bull bar. That's a negative. We need to have a bear bar, and the bear bar needs to be a real breakthrough bar. And a real breakthrough bar is what you see in this bar right here. It is above the EMA to begin with, and then closes below the EMA. That signals that we are possibly looking for a sell opportunity. I say possible because there are two more conditions that must be met. The next bar must automatically be a bearish bar, and the RSI must be below the 50 baseline. And the RSI cannot be near or above or below the 30 level, because this indicates oversold, meaning the trend has most likely already exhausted. Now, does this always work? Most of the time, but it's not 100% reliable. Here is proof. Go back a little bit and you'll see, well, if you take the setup, actually I take back what I said, this is actually not a breakout because the first bear bar opened below the EMA. Not valid. Remember, the bar must start on a downtrend to consider a sell position. The bar must start above the EMA and close below the EMA. Then the second bar must be an automatic bear bar, and then the RSI must be below the 50 but not very close to the 30. When those conditions are met, you can enter a sell position. The same goes true for a buy position. Here we have a real breakout, and look what the results was. This is a buy opportunity. Price closed above ever so slightly, but let me blow this up a little. Let's see if you can see. Oh, then I have to. Okay. Price closed ever so slightly above the EMA. The next candle was a major bull bar. It was definitely a bull bar, no arguing. Price, the RSI at that point was also, if I put the crosshairs, you can tell, the price was, the RSI level was definitely above the 50, and it was at the second bar just as well, but yet it was nowhere near at the overbought range or 70, and so we entered on the third bar. And now, as you can tell, look at what the result was of this trade. And if you think that I didn't catch this and I missed this, well, let me show you that exactly I did not. Okay, where's my account history? Here we go. That I most definitely did not miss this trade, because this was the result for me in this trade. Not bad, huh? For one day In fact, if I have to be very honest, this run happened in just 10 minutes or less. I started the trade at 2006 on the April 4th. I exited the trade at 2010 on April 4th. In 4 minutes, I made this much. That's the power of the MA Breakout with RSI filter. But it has to be a real breakout, not a phony breakout. Now, of course, you can have breakouts that are real breakouts and they don't result in this kind of run. Of course that will happen. As the saying goes, in trading, you don't have every entry making profit. You're going to have losses no matter how professional the trading strategy is. And I'll give you a little sample of this. Right here, the price opened above the MA, but the EMA, and clearly closed below the EMA. Then the new bar started below the EMA and clearly continued downward as a bearish bar, and this would have been a sell entry position, which I could confirm by going to my RSI right here. I am obviously below my entry level, right, but below the 50 mark or the baseline, and I'm a good distance away still from the 30 or over sold buffer. But yet it didn't happen. Price kind of retraced a little bit and a little bit more and a little bit more, and then it kind of just went flat, and then it went. So this is where this method lacks right now at this moment, because this is only the beginner's phase of where we're going to take this strategy eventually. So please be aware of this. And just because all the conditions are met does therefore in the beginner's phase not mean that you have a guaranteed profitable trade. All right, so this is really the entire setup of the MA Breakout with RSI filter. It really isn't more complicated than that. Just to clarify, we do real breakouts where price is below the 50 EMA, moves above, closes above the 50 EMA, continues above the 50 EMA, and that would be a buy position. Or price starts above the 50 EMA, moves below the 50, closes below the 50 EMA, continues below the 50 EMA, and that would be considered a sell position. True breakouts. The RSI at the same time, when price continues to go in above the 50 EMA, would also be above the 50 baseline for the RSI, but not yet at the overbought level, which is 70. In reverse for the sell, the RSI would have to be below the 50 baseline, but not below or at the 30 oversold position. Those are the conditions, and this is what this strategy is. That is all there is to it. So now, for MT users only, I have a nice little gift for you. You can obviously install this yourself, the indicator and the RSI. It's not so hard to do, but I have a special gift for you that unfortunately only works with MT4 platform. Let me remove both of these, and again start with a clean chart. There we are, just price only. I developed a indicator that will automatically load the moving average and the RSI indicator preset with the default settings that we will use for this trading strategy from beginning to pro level. So I'll put a link below where you can download it, together with the link where you can also download your booklet that accompanies this phase of the education. Let's install the new one that I created. I go to customs and I look for MA RSI, which is what I called it. I click on it. All the settings have been set to the proper default, so you don't need to change anything. Remember, this is a custom indicator that automatically loads the RSI and the EMA with the proper settings, but there's one additional feature that is not found in a standard moving average. Here you can choose whether you want the moving average to be updated on every tick, which is what a standard moving average does, or at the start of, or at the close of a bar, which is what the ability is with my custom-made moving average. What's the difference between the two? Closing on a tick means that the MA will close, and I'll let me install it so you see first what it looks like. There you go. Levels are set automatically. Everything is installed automatically. We're at the RSI 20, the EMA 50. It tells you here at the bottom that you're having an EMA and it's updated on a new bar. So what is the difference between on a new bar and on every tick? Well, on every tick, as I already mentioned, is the default setting for every moving average that is available in any platform or that you can download everywhere. It simply means the moving average is updated every tick, regardless of whether a bar has already closed or not. So every price adjustment a bar makes, up or down, the moving average also gets adjusted. That leads us with a much more, what's the word I'm looking for? Less smooth. I'm over exaggerating now, but the EMA may go like this, while with every close, updating the EMA on the close of every bar, it will be more like this. And my drawing is obviously not so good, but something like this. So why do you want to do this? Why you want to have the moving average updated at the start of every new bar and not on every tick? Again, I already explained, on every tick gives us too many whipsaws back and forth, leading to false signals. Since we do a real breakout routine, which now I already explained to you what the conditions are, we have no need to have the MA updated every tick. We only need to update the MA every time a new bar starts, because it gives us a much more accurate view of where price is really at in regards to the way we trade. So by updating the MA at the start of every new bar, I know exactly whether the bar opens up above the MA or below the MA. And that is far more important than having the MA update every tick. And, you know, I mean, I'm exaggerating this, but you get what I'm trying to say. So this is unique. This is my own custom feature, yours to have absolutely for free. I apologize to all of you who do not use MT4. I unfortunately only know how to code in MT4, so I don't think there'll be anytime soon that I'm going to convert this to the script used by TradingView, for example. Again, I apologize. But for our routine, for a true MA breakout with RSI filter, we use the moving average that updates on every new bar. Okay, Please don't forget to click on the links below to download this special indicator if you have MT4 platform, and also don't forget to download your booklet. I kind of rushed through all of this here, but in the booklet you can peacefully read and get a full understanding of everything that I've been explaining here, including the reason for the MA updating on every new bar as opposed to on every tick. Okay, we'll see you in the next video when we'll start moving into the advanced period already. See you then, take care, and as always, God bless.